Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The market bears have been lurking for some time now as the market again fails above the 68 handle. With the bears ambushing the attempted challenge after posting a high of 68.08, the market slipped down and actually nosedived to a low of 67.34. Yesterday, the highly anticipated figures of the Australian wages growth was released and just came into the forecast of 0.6% in June quarter. With an annual wage growth was steady at 2.3% and was near a 4.5-year high. The monthly update on China economy, however, was a little bit disappointing. The retail sales rose by 7.6%, but down from 9.8% from the previous month. Chinese industrial production climbed to 4.8 annual rate in July, but lower from the previous month of 6.3. This was viewed as the slowest growth in 17.5 years. Chinese unemployment rate has risen now from 5.1 to 5.3. Looking at the technical pattern, there's no immediate threat to the downside as of yet, even though we did take out the 45 level. The reason behind that is the technicals are still showing a little bit of bullish bias. Although my broader picture is to 66 cents, we should still keep in view that any advances can still challenge the region of 68 to 68.45, where I'd like to get short. But overall, I feel the market will fail from this region. As you can see, all the spikes above here, and then look back down to the potential target, as I call, of 66.20.45. Well, as you can see, the euro, after many attempts with the doji, a bullish outside range day that failed, no confirmation, is that we crushed the level of 111.70.75 overnight. Despite Germany's latest growth data showing a quarter of contraction, the euro-dollar pair has been unable to avoid significant losses since the failed upside challenge, as I mentioned, above 112. It is assessed that now the break of 111.70 should open the way towards the region of 111.20, with 30 being the low overnight. Could see further slippage and down towards a target around the level of 110. From a technical point, the market is breaking down. So let's see if we do see a further weaker play into today. The dollar yen, as I feared, this was an exaggerated move, and the rejection from 107 has put the market back on the path to the target of 104.50.80 region. It is assessed from there that the market will probably take some profit from there, but from a technical point, it is still relatively bearish. What's giving this slight risk to the downside in yen strength is the fact is that markets turn back to safe haven after mounting signs of global economic slowdown, stoked fears of an economic recession. The global equities turned sharply lower overnight, and the 10-year Treasury bond yield fell below 1.6% on Wednesday, dropping just below the yield of the 2-year Treasury bond. It marked the first time since 2007 that the 10-year bond yields fell below the 2-year yields. This has given some concern across the globe, and you can see from that the market has turned back to safe haven, which we will see in a minute with gold, that the fact is that the strength has come back into play. But looking to the sterling, no significant move since the break of 120.50. It is assessed that the market is continuing to lack momentum and direction, but from the break of 120.50 should still keep in view to 119.70. Gold, well, this outside range day, from the rejection from the top side, which was at 1,534, and then we plummeted to a low of 1,479 and then rebounded, is the fact is market is still trending and still holding to a bullish case. we could see a rise back towards 35 and reassess from there, with dips to be shallow around 18 to 11 support. It is a little bit disappointing that the view from yesterday, which I turned neutral after reaching my target at $56 a barrel, is now backed off from the highs and now looking a little bit weaker. I still hold a neutral view for one more day and see if the oil can actually stage a recovery from these current levels. If not, we could see it return back towards the bottom side of the range, which is at $51 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the Intraday report. I hope you enjoy the great start to this new day.